Many thanks for joining me on Business Nigeria this Thursday, the 17th of May. I am Yemisi Landre Idowo. Well, the passage of the budget is still on many lips. Many are still talking about it this Thursday, and in conjunction with the latest inflation figures released by the National Bureau of Statistics. But first off, before we discuss that, that's also on the front burner on Business Nigeria today. Let's see some top stories. The Association of Bureau de Change Operators of Nigeria has called on the Central Bank of Nigeria to review the exchange rate band at which BDCs buy dollars to align with commercial banks' buying rate. President of the association, Aminu Gwadabe, says operators still buy dollar from international money transfer operators as directed by the CBN at 360 naira a dollar and sell at 361 naira 5 kobo a dollar, whereas commercial banks buy at 357 naira per dollar and sell at 360 naira. Gwadabe says leaving the rates as they are presently does not allow healthy competition between both segments of the market. According to him, the rising naira liquidity, high demand for dollars in the travel and international school fee seasons, as well as rising forex demand at the retail end of the market remains big concerns for exchange rate stability. And not just BDCs talking about the exchange rate. The president of the Lagos Chamber of Commerce and Industry, Babatunde Ruwashe, is also sharing his thoughts on this exchange rate volatility, which he says has reduced over the last 3 quarters, while businesses are also witnessing improved liquidity in the forex market. He made this position known at the quarterly press briefing on the state of the economy, stressing that better results will be achieved if the CBN checks multiplicity of forex rate and disparity that persists between the official and parallel market rates.
Stable global oil prices and local production level of crude oil remain the 2 major critical factors driving the current stability in forex market. Meanwhile, there are concerns over the following issues in the forex market: multiplicity of forex rate. The CBN currently operates multiple rates, and this continues to raise transparency issues and impact adversely on investors' confidence. 2, the wide gap between CBN official rate of 305 naira per dollar and other rates at 360 and above continues to create undue arbitrage and transparency issues.
Well, Ruwashe also shares his thoughts on the delay experienced before the passage of the 2018 budget.
There is need for better communication between the National Assembly and the executive arm of government. They need to be on the same page with regards to fundamental principle of the budget. It is also necessary to clearly define boundaries of responsibilities between the executive and legislature in the budgetary appropriation to avoid recurring problem of delays.
Well, let's get down to business, and that's talking about the 2018 appropriation bill, which has just been passed. It's no longer news that the National Assembly has now passed the bill after about 6 months of delay. What's new is the increment from 8.612 trillion naira to 9.120 trillion naira, and concerns about implementation of the capital vote, considering time already wasted. The Director General of Nigeria's Budget Office, Ben Akwabueze, shares his thoughts on legislations.
The solution to this is for us to pass the organic budget law, which includes a budget calendar, which will bind everybody on the executive and the legislative side to, do their own, part of the budget process by a particular timeline.
All right, now let's see a quick breakdown of the latest with the 500 billion naira increase. The chairman of the Senate Committee on Appropriation, Danjuma Goje, said the increment was informed by a decision to increase oil benchmark from the proposed 45 naira to 51 naira, an exchange rate of 305 naira to $1, and production of 2.3 million barrels of oil per day. While funds accrued from the increment will be spent on some projects already earmarked by the committee, a surplus fund was spread on some critical sectors, given a breakdown of how much more will be spent on different sectors. Now, with the latest 42.72 billion naira will be spent on security, 57.15 billion naira on the 1% vote for health as mandated by the National Health Act. And the Ministry of Power, Works and Housing now gets 106 naira, 56.50 billion naira. While other areas are education, 15.7 billion naira, judiciary, 10 billion naira, and Niger Delta Development Commission, 44.20 billion naira. Now, the chairman says the increment will allow for a 50.88 billion naira deficit reduction. Well, with the budget now awaiting executive assent and annual inflation at its lowest level in more than 2 years, let's talk to the head of research, FSDH Merchant Bank, Ayo Akinwumi, on this increment. Many thanks for your time, Mr. Akinwumi.
Thank you for having me.
Yes, as I said earlier, it's no longer news that the budget has been passed. We've witnessed a lot of delay, and it has been happening over the years where we see delay in the passage of our budget. There's a lot of implication to that. As I stated here, there is the unplanned economy, stifled projects, funding. It portrays poor national image. Now, the latest is that the budget was also increased by 500 billion naira, about 6% increase. Let's get your own take on this. What could have informed it? They said, okay, the proposed, it was as a result of the increase in the oil benchmark. In your own view, do you think that's so? Or some people will say it's the pre-election year.
Thank you very much, MC, for having me. I do not want to belong to the school of thought that says it's because of the pre-election year, because that we presuppose that we are expecting government to pass a budget and use it to fund the election. I don't want to support that. I believe that the gains in oil price, the last few, between the time the budget was prepared to submitted to the National Assembly and now actually justify an increase from $45 per barrel to $51 per barrel. I heard that's just about $6 per barrel increase. However, we must be very careful because we do not have control over oil price. In fact, oil production, we don't have control over it because we belong to a cartel, OPEC, who determines our quota for us as a member of that organization. And therefore, so if we have increase from $45 per barrel to $51 per barrel, giving us about 500 billion naira increase we have in that place. What happens if, for case of, for just case of argument, there is a turn or downward trend in oil price, even though the forecast we are seeing all over across the country, U.S. Energy Information and Administration is saying $71 per barrel on the average this year. So you can say that maybe that $51 per barrel is about almost $20 per barrel, you know, conservative estimate for the period, which for me, I think maybe good, but then we just have to be very careful about how we raise it such that if there is a downward trend in the oil price, and then that we may not be able to, you know,
manage
fund the budget.
It. Yes, all these assumptions, even the OPEC has said there might be a spike in oil prices to about $80 a barrel, but that's just very tricky because it's based on geopolitical issues and not on the supply that we have. But let's also look at, as an economist or a researcher, with these assumptions, do you think it is actually right to do this? Okay, because this is just based on assumptions and based on what's happening in the oil market. We saw what happened and what led to the recession we witnessed about 2 years ago.
I do believe that Nigeria needs to diversify our revenue base such that each time in the next few years when we are making budget assumptions, we are not only pegging it on oil price. But I think the federal government is doing pretty well in that area in trying to incentivize the non-oil sectors of the Nigerian economy to grow more revenue. They are also trying to put in policies measures to ensure that they collect more taxes. Nigerian tax revenue to GDP or revenue is one of the lowest in the world. So they are putting a lot of measures in place to ensure that we grow that the revenue, the tax base, and to make a lot of people pay more taxes. And therefore, when that is done, then it will go a long way to diversify the dominance of oil revenue in our budget, which will make sure that, okay, good, in the next few years, we're not going to be talking about just oil price alone in forming our budget. But then, so the assumption of oil price for me, I think, given the OPEC forecast and US EIA forecast, I think you may want to say maybe is reasonable. I still have some issues with maybe in the oil production 2.3 because it doesn't appear that we have achieved that in the last few years. Yes, there has been a lot of relative peace in the Niger Delta region of the country where this product is being produced. So given the negotiation and the cooperation from the people in that area, so we've not been hearing about bomb destruction of oil pipeline, because if that happens again, we are not going to be able to achieve this. Now, again, the exchange rate, because when you have something that is the value is in dollar, you have to convert to naira. So the exchange rate of 305, they are using that, which is the central bank exchange rate. I think that we need to revise that to where the market is. If that is the rate at which we're going to be exchanging our oil revenue, it means that we are going to be under-reporting our revenue. So move it to where the market is. Even, the last Eurobond, we understand that federal government did not even exchange at 305. So where are we benchmarking our oil revenue to 305? So move it to where the market is so that we can get more revenue and then possibly save additional money for the rainy days. Because that's one of the problems we have in this country. When we have oil price is going up, then we begin to say, oh, it's time for us to spend more, and not even spending more on something that has the capacity to generate additional money, but on frivolities, which I think maybe the current administration needs to work on and ensure that we build a buffer for the rainy days.
All right, we would have to take a break on Business Nigeria. When we come back, we'll also see that the inflation rate stands now at 12.4% compared to what it was in March. And I know you also made some predictions at your firm there. But we'll talk about that and talk about the budget now being passed, although it's awaiting assent of the executive in relation with inflation. And we'll see how that works now. Well, you're watching Business Nigeria, and that will be after the break. This is Business Nigeria. We're talking the past budget, although with an increment of about 500 billion naira and inflation, which stands at 12.4%. Well, I've been speaking with the head of research, FSDH Merchant Bank, Ayo Akeomi. Just before we talk about inflation, I know you also made some predictions before the release from the NBS. Are you worried, still talking budget, are you worried about implementation of capital votes, considering the delay?
I think I am worried, just like any other Nigerian will be. However, if you observe very well on how government runs, and then we are in a pre-election year, President Muhammadu Buhari has indicated that he's going to run for 2019 election for the same office. I believe, given the kind of person he is, he will ensure that the cabinet and every relevant ministry put their acts together to ensure speedy implementation, such that by December, when INEC declares election campaign opens, they will be able to show us their scorecards. These are feasible things they have been able to achieve to campaign in 2019 to make them demand for our votes. So I think it may likely happen. And if you, observe what has been going on in the last few weeks, we have seen Mr. Fashola, the Honorable Minister for Works and Housing, moving across the country, commissioning roads and flagging off a lot of projects, both road and rail, and also power. I think about a few weeks ago they mentioned that they have now given approval for any investor who wants to generate about 2 megawatts of electricity, either from solar or from any source, without necessarily getting approval from NEC to do that. And it can actually sell the excess that is beyond what it can generate. So those are various measures, and I think this week also the passage of the revised Company and Matter Act, so which has been there like that for a very long time. These are measures that I think that the federal government want to put in place to ensure that when they want to start election campaign, they will be able to say, these are my achievements, then you...
Okay, so in one word, yes or no, the pre-election year is going to have a positive one with this passage of the budget?
I think they want to implement it very fast to ensure that they use as a campaign point in 2019. Okay,
let's talk about the inflation. The NBS released a 12.4% decline in April, and I know FSDH usually makes its own prediction. Does it align with what they actually...
Yeah, it's aligned what just some few basis points, about 5 points lower than what higher than what we released. We released 12.43, and then NBS released 12.48. So still on account of base effect. But for me, it's just the implication of this for the market. We think that now that the foreign exchange rate is stable, there seems to be stability in that area on account of the improvement in oil market development in oil production and oil price. Then if the central bank, now we are having declining inflation rates, I think maybe the central bank, they want to say it is time for us now to begin to ease policy to stimulate credit creation and to stimulate economic growth in the country.
Yes, the MPC is going to be meeting anytime soon. So from your take now, are we going to see a likely ease?
That's what we think should happen. We're going to release a note tomorrow on our expectations, and we are thinking that it is time for the central bank to ease policy. Price stability, which is a very an important objective of the central bank, we have recorded a measure of success in that area in the last few months. We've had declining inflation rates since January 2017. Exchange rates, yes, at the current level is being stable. Oil price going to continue to rise according to forecast, which will also ensure that stability comes to place. And therefore, we think that central bank should then continue to implement policy that will stimulate the recovery that we are coming from.
But then the MPC has been looking at the issue of inflation and trying to keep it at bay, and still talking the pre-election year, there's going to be a lot of spending in the system. I know they've been urged to manage the way they spend, but you can't actually control that. So looking at that, do you think they would want to still ease it or keep it at what it is?
So, one of the arguments this is one of the arguments people bring to bear. But then if you look at, again, as the inflation number is been declining, our forecast is that maybe towards July this year, we may likely have single-digit inflation rate. Right. Yield on federal government securities have been declining very rapidly, right? And therefore, the last auction for the last auction for Treasury bill was released yesterday. The yield about 11 for 1 year money, about 11.95 thereabout. Okay, this time last year maybe it was about 22% thereabout, but has crashed to about 11%, almost half of that. Now, so government is even borrowing money, at a cheaper rate in the market now, both from the short end of the market and the long end of the market, aligning with the strategy of Debt Management Office to lower the interest expenses for the federal government. So what is MPR doing at 14%? Okay. If in the last few years, the last time they increased MPR to 14 was, I think, July 2016. So there has not been any relationship between that MPR at that level and the yield in the market which government is using to fund money. And we are saying if you look at the growth in money supply, growth in credit, year on year in the last few months, it's been lower than the target that the central bank set for the economy to achieve the desired growth that will propel job creation in the economy. So if, and MPR is, there are a lot of lending that are predicated on MPR. So if we now say that we've achieved certain level of stability in prices, inflation, and exchange rate, and we are still having issues with growth, credit creation, with improvement in the economy, banks should lend money. I think it is time for them to say, let's ease policy, either in terms of adjustment to MPR or adjustment to CRR to enable banks lend more money, and or to enable small and medium scale companies to have access to credit at cheaper rate, and that's just our view. All right. So, lastly, before I let you go, if they actually ease it, what do you think? At what rate would you think it will be eased to? Okay, maybe 100 basis points reduction, but then more importantly, the one we think may even have more impact in the market is actually the adjustment to the cash reserve requirements that they need to, even if it's just about, because effectively it is about almost 30% in the market now. So we need to adjust that so that there will be more liquidity for the banks for them to lend to the economy. Head of Research, FSDH Merchant Bank, Ayo Akinwumi, thank you so much for your time on Business Nigeria. Thank you very much. We appreciate your insights. Thank you. Well, lastly, before we go, crude oil prices remain top at market centers as dealers now pay more for energy commodities. At the London market, the popular European Brent trades for $79 a barrel, taking 12 cents on value improvement. The OPEC basket brand, representing 14 nations, steadies its value at $75 a barrel. Many oil price producing nations, including Nigeria, currently earn higher revenues from crude sales. And with that news from the oil markets, that's Business Nigeria. Many thanks for your time. Join me again tomorrow. I am Yemisi Lanre Idowu.